me a little bit about where you're finding opportunities for innovation and leadership in this industry that you've arrived in.
Yeah, so it's kind of funny. There's, even though there's in the U.S. there's something like 2,000 or so ETFs, we see there's a lot of white space, and a real lot of white space. And I think don't really define innovation as creating a sort of a thematic ETF or another sort of multi-factor ETF. I think there's thematic ETF. There's a multi-factor ETF for emerging markets in for small caps. There's an emerging there's a multi-factor ETF for companies that were founded in 2012 when the sun rose on the I mean. With the when the founder's last name is
I think I wrote that one up.
It's just there's so many different types, and introducing a new not only just a sort of putting some equities in a basket and calling it sort of technology X fund or healthcare X fund. This is a completely different structure that can be applied to any asset class. So like I said, we have a pretty large area of white space, and on top of the initial structure, we have I think around 20 plus other first to market products that are dissimilar from that initial structure. So we're really excited for sort of the investors to have access to all of these that we believe are really good products for them.
Tell me what you think the ETF industry will look like. It's just seen extraordinary growth and survived massive volatility this year and come out really well. Do you think what should firms be looking at as we advance in the investment industry?
Yeah, I think it's going to be. I think the growth will continue, and I think you're going to see sort of the new set of kind of what I was saying before about the quantity versus quality. And I think the wisdom trees of the world and Amplifies and Foresides, and I think Wilshire will be in that mix. Will become the leaders as we move into the next decade, and kind of not join the kind of the race to zero, is what I call it. I think there'll be a lot more ETFs that continue to exist, but when there's so much choice, it's quite confusing for investors. And again, I think it's just about putting out products that are good for investors and that are meaningful at the time, and that sort of go with the by the time you create a thematic ETF, it's already too late, right? I mean, the theme has already been developed, right? So it's a great way to get exposure and kind of reduce volatility at the same time than buying an individual equity. One I really like is TAN, which is a solar ETF. I think I really like it too because it has a fantastic ticker. But I think if you look at the basket and then you look at the individual, just as an example, is the individual equities in there, you don't run the volatility of the ETF is quite lower than the individual equities themselves, either individually or as a whole, and you don't run the risk of sort of one company on earnings going down 10% in one day, and you're holding kind of 20 equities. It's not really what's it going to go down to a point or something. So that's why I think ETFs are great too. But I think in the next few years we're going to see different structures. Hopefully others will follow our lead in creating more meaningful and thoughtful structures. And I think around clean energy, genomics, sort of the silver generation Y, I think will be more, or is it Z? I don't know. I have all the acronyms now, but I think they're essentially going to be more disruptive than millennials and how they enter the workplace right now. And read something interesting the other day that by 2025, there's going to be more people over the age of 65 than there is children under the age of 5. So more grandparents than there is grandchildren. So sort of I think of it, the silver economy is something to look out for. Which
a big driver. I mean, what sectors and markets would you like to see Wilshire Phoenix dive into in the future?
So I think there's like I said before, there's a big white space, but I think some areas that we're sort of playing in the commodity space right now, which is innovation there is muted, if anything, ever. And then we're kind of talking about doing something in fixed income, which we may use might use some of maybe the similar model to what we're going to be launching, but I don't really want to say that because maybe by the time we're in the next 12 minutes, maybe I think BlackRock will submit an S1 on it. So just joking, guys, just joking. So I think it's we'll kind of keep that closer to our chest, but I think the just sort of like I said before, kind of any space that I don't like to use the word kind of disruption. I think innovation is starting to get thrown around a lot more than it should be, because I think there's real innovation, like what we're doing and actually changing structures and what have you, and innovation in what you're talking about in the panel earlier with the non-transparent ETFs. That's innovation. Innovation is not creating a thematic ETF or creating joining the race to kind of the race to zero by lowering fees or what have you. And what suffers there is when everybody kind of participates in that is quantity increases, but I think quality goes down substantially, and the only people that suffer there are investors.